Well, thanks. This is sounds like this will be a great panel. Why don't we just have each of the panelists quickly just introduce yourselves and what your firm focuses on, and then we can go from there. You want to start?
Sure. So I actually come from more of a operating background. So I actually I started as an engineer, but then worked as a management consultant for 5 years out in Greater China, and then worked for a series of American technology companies. Motorola first, and was with Apple for 8 years, and then helped Tesla to get started in China for to get their cars delivered, and then so really a lot of experience in terms of helping companies and technology companies, especially from the U.S. to land in China and build their business. And then at the sort of, I would say, early 2015, I was kind of met with Mr. Shen, who's the founder of CSC Group, which is a large PE firm in China, and he had raised, the firm obviously managed over 60 billion RMB now, and decided that he wanted to go global, and so he asked me to help him think about how to grow to be an international firm. So we, because of the, obviously my passion for technology, we decided to come to the Valley and built a very unique partnership as we kind of saw how the ecosystem has changed with operator angels. So built a unique partnership with AngelList, and have been leveraging that partnership in terms of accessing into some great deal flows, and built a unique machine learning model that's now today allow us to actually access and select and build seed, do seed investment at scale. In the last 2 years, I think we've become one of the most active investors in the seed universe in the Valley.
Great. Jalak?
Hi, I'm Jalak Jobanputra, founder of Future Perfect Ventures, which is an early stage fund based in New York City. We do mainly seed with some Series A investments. I founded the firm in 2014 based on the thesis of decentralization. I went to my first Bitcoin conference in 2013. I was kind of bitten by the Bitcoin bug back then. And was already thinking of launching the fund. For some background, I was an investment banker in media, telecom, and tech in the mid-90s. I worked on the Netscape IPO, which was kind of a life-changing moment, even for the bankers. I know it was very much so for the technologists. And then I was an entrepreneur for a bit, and in '99 I moved out to the Valley and started investing for Intel Capital, and invested in kind of B2B wave, moving from client server to more web-based models. And then was at various funds, including Moderator, where I managed their program of investing in mobile and the emerging markets. And so kind of was born in Nairobi, have a very global background. And so when I was thinking about decentralization, I was thinking about the 3 billion people that were going to come online, in the next few years. How many of those people were unbanked or underbanked, and how many people around the world don't have any form of government ID. And to me, all of that kind of represented new business models, new opportunities to invest, and I felt like most venture capitalists in the US, and in my experience, were not aware of what was happening in Indonesia, what was happening in India, and the fact that India was going to become the most populous country, by 2020. And then when I started digging into blockchain and kind of the technology underlying Bitcoin, it kind of all came together on this could actually, this technology could help create or underpin some of these business models, and create this hyperconnectivity or enable even more hyperconnectivity. And so we invested in most of the early leaders in the blockchain space, including Abra, which just raised a Series B led by Foxconn, and we're going to hear about that later. We were a seed investor there. We were a seed investor in blockchain, the largest cryptocurrency wallet in the world, which has subsequently raised from Lightspeed and GV. BitPesa, which is the default cryptocurrency network in Africa. And Token, which is, I think very representative of the thesis, which is not only blockchain technology and private key and security, but they're a biometrically authenticated smart ring that allows, that also has an NFC chip, allows payments, allows Metro card access, transport access, so kind of replacing the wallet, but doing it in a very secure way. So it's a combination of hardware, software and security and private keys, and is really where I think the future is headed. So we're currently investing out of our second fund, kind of scaling this thesis, which has, as we all know, taken great hold over the last 6 months, and we'll talk about that. Yeah.
Great. Christopher?
So I'm Christopher Calicott, Managing Director of Trammell Venture Partners. We're based in Austin, Texas. Two of the partners are, one's in New York. Our firm is being built out of, frankly, opportunity. One of my partners, Dustin Trammell, formerly spent most of his career as a cybersecurity systems vulnerability researcher. We've been friends for the better part of 20 years now. He had a very fortunate event in his life. It kind of was at the confluence of our work, me as an IT generalist, with strategy being my core strength, him in cybersecurity, our friendship, kind of Austrian School of Economics, and what would the future look like if currencies and value person to person might have been exchanged at a non-state level, stateless fiat currencies. And so those interests for Dustin ended up meaning that he got involved with the white paper stage of Bitcoin. Kind of fast forwarding a few years, that translated to a very interesting set of deal flows. He needed some help with that from an equity investment standpoint. We considered how could we institutionalize this. So for the past few years, we've been executing on our strategy against our own capital, and now we're institutionalizing our practices, enhancing what we have in our differentiation and building a firm. But at its core, we're thematic around the technology domains. We know a fair amount about machine intelligence tech, cybersecurity, and blockchain, and we believe that you need to know something about all three of those because that's the platform atop which we'll build the future. And so we're sector agnostic, we're geography agnostic, but we're very focused on the technology.
Great. So in terms of this idea of disrupting venture capital and the model, I wanted to ask the panel a little bit about the blockchain and ICO craze that's been going on. What kind of companies and or non-companies are you looking at? Do you only do equity? Do you do tokens? Is there any governance involved we talked about earlier? Or is that just the thing you think about later? How does this change the venture capital model? Do you want to just, whoever wants to jump in?
I'll jump in there.
Okay.
I think that governance specifically is something that will need to exist if the model is to be sustained. If you're asking about disruption, I think disruption in markets isn't something that happens in a very uniform fashion. There's this idea of the unbundling of venture capital, of the four kind of primary services or functions that VCs give. Capital, that's clear. Advice and coaching, governance being one. And lastly, kind of a services function that might be around HR, key hires early on while they're building product. I think that for seed stage investors like Jalak, myself, Veronica, and her firm, I think that we actually might be quite well positioned because those other three besides the capital, those functions are going to be actually increasing in importance in order to sustain the model. It might be that on the heels of an equity investment, there is a token offering. If it makes sense strategically, rather than the kind of current, let's throw an ICO on it,
Right.
which makes very little sense for most companies.
Yeah.
But it might mean that a couple of things happen. Number one, we might actually get a lever on our equity investment from early stage, and they're going to have plenty of runway, but they still need help to build the teams. They need some guidance in how to self-tranche that capital and apply it appropriately, but they may never, in some cases, ever need to raise money again.
So they're still investors, they're still venture capitalists, but they're not the traditional ABC.
Yeah, well, I think companies may end up skipping if they have a successful ICO. So I think that's definitely one potential implication. But the other implication, I think, what ICO does once these companies, obviously there's still some regulatory issues to resolve, but I think the longer vision, I think, where it could be very interesting and potentially disruptive is as these tokens, right now these tokens don't represent, they're not linked to securities investment or equity investment. Now, if you think about if in the future where it could be potentially through smart contract linked to equity investment, then there's a really interesting scenario where you could sort of say a private company can be actually as liquid. And if you think of these coins that actually reflect values of companies, then could be as liquid as a public company. And obviously this is going to take years to evolve, but that's where things, and if you think about the reason asset or capital is being allocated today the way it is, it's, there's a very small amount relative to the whole asset, only probably less than 20% of total asset being managed in the private space is mainly because people are taking that liquidity risk. If you take that liquidity off the table, the whole asset allocation formula changes. So personally, I think there's an even bigger potential disruption in the whole capital game in the longer run if those governance issues and the security, those regulatory issues, compliance issues get solved. That this technology could potentially impact the total capital market.
Yeah. Yeah, I have heard people talking about the idea of tokens, instead of tokens being raised, instead of equity, tokens are the equity, sort of, your equity is sort of tied to a digital token,
Correct.
Sort of that idea, but obviously that's a ways out. But.
Yeah, and I think that's, when we think about, there's several categories of tokens, and unfortunately what's happening right now is a lot of people are just using tokens and ICOs as a way to raise capital. And that includes existing companies that are kind of throwing a token model onto their existing model, and it's, some of them have had trouble raising venture capital and subsequent capital, and that's what they're doing. However, and then there are other companies like Tezos, which raised $230 million in an ICO earlier this year. Their stated goal was 20 million, and then they did it through a Swiss foundation, which was a way to circumvent, U.S. regulation. But they are now having issues, governance issues between the foundation manager and the management team, and like this, who really owns the tokens and who owns the IP, and that could have been predicted, right? Because you can't. I think there's a leapfrogging that's people are trying to do here, and I work very closely with the SEC around educating them and jurisdictions around the world on educating them about this technology and what the positive implications could be for them, and I think they're very open to this, but things aren't going to change overnight, and the companies that are trying to circumvent regulation or kind of use this technology in a way that doesn't make sense are going to get weeded out, and I hope that happens soon, and so because I think there's so much underlying potential behind this, including what Veronica mentioned in terms of starting to look at tokens. There are venture funds that are starting to do offerings where LPs can have a more liquidity behind the venture investments, and so that will happen someday.
Yeah, we're running short on time, but I wanted to ask you also, Veronica, because we talk about platforms. Does any of this change the seed or AngelList model that's become really popular recently? Do you see things evolving?
Well, I don't think it changes that. I think we talked about it, Jalak and everyone referred to, which is actually there is a level of governance and compliance that is required, and actually that's part of, we talked about CoinList. And CoinList actually is born because of the whole thinking, and AngelList having done a lot of these syndicate sort of early stage seed vehicles, understanding, they have a much better understanding of what compliance layers, and they are obviously also in conversation with the SEC, understanding what the SEC is looking for in terms of qualifying and vetting the investors, qualifying and vetting, the white papers and the coins, so that when they are issuing CoinList, is able to issue, Filecoin actually came out of CoinList, so when they're issuing ICOs on CoinList, that these are completely SEC, in a way, SEC compliant, so nobody gets sued. I'm sure you heard SEC is going after some of these ICOs. Nice. So I think that definitely there is still maturity of the market that needs to be evolved there, and platforms like AngelList or CoinList is helping to kind of push it to the next level of maturity.
Okay, great. Looks like we're about out of time, unfortunately, but great to do this.
Yes, unfortunately we're out of time, but let's give a warm round of applause to all of our speakers today.